You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Welcome to Talking Real Money, the wedding edition. I'm Don McDonald. Literally, I was just attending a wedding a couple hours ago in North Carolina, so I'm in the bridal suite right now. My brother-in-law and his new wife are off getting some stuff. So at some point in this hour, I may get kicked out.
I think that would be appropriate, actually. So yeah, I think that's good.
You're just looking forward to it. You just want to see me get the bum rush out the door. I know you do.
No, because the show's better with you here, frankly. So I'll be honest with you.
Yeah,
I miss you too.
That was so nice. Hey, if you miss us or if you need us, you want some advice from us, you want a little counsel, you want someone to hold your hand or shoulder to cry on for some of those bad decisions you've made, second opinion, whatever it is. If it involves money, we're here to help at 855-935-TALK. And we mean that sincerely from the bottom of our hearts.
And if you're calling about Horner, Townsend, and Kent, we're not taking your call.
Oh,
so
my
leave it
gosh.
at that.
Yeah, Tom, of course, doesn't seem as sincere, but he is. He's really the epitome of sincerity.
That close.
855-935. What?
That close to sincerity. Yes.
Yeah,
we got to go to the phones before we
so
talk
close
about
you could
Congress.
almost touch his sincerity.
I know, it's right there.
I don't think we're ever going to get to Congress, so forget about it. We may never get there.
Well, it's going to be just like
Mo.
Congress. They're never going to get to it either. So,
Mo, you're up next. Welcome to Talking Real Money.
Hi, Mo.
Hey, how you doing?
Good.
Good. Hey, I had a question for you. It's about my son's account. He's put enough money in his 401k to get the match. He's pretty maxed out on his Roth, but he's got a health savings account. And I was just thinking, I mean, it looks like just the research I've done is that the health savings account, you take everything out completely tax-free when you need it for health. So I'm wondering...
For medical expenses, yes.
Right. So, and I know a lot of the medical expenses or the money that he's going to take out of his 401k eventually will go towards medical. So should he be maxing out his health savings before his 401k?
No.
No?
Yeah. We put an emphasis on retirement. We believe that is the place that most people should save and invest first. Then other things like kids' college education, health, and those things, health savings accounts, those come second or third.
And you're correct about the HSA. That does grow tax deferred. I don't think it's
free. Well, it grows tax free if you use it for medical expenses. But here's an interesting twist on it, Tom. If you have a balance because your balance can continue to grow and accrue tax deferred. But if you let that go into retirement, you can pay for your medical care, your Medicare, your Part B, all of those things with that money. And it remains tax-free.
But I would do the 401k first. I would do the Roth and then the HSA. And by the way, I'd be careful about how that HSA is invested, because one of the mistakes I do see people oftentimes take is they make that too stock heavy and then the market goes down and they need the money. And I've seen this happen before. So I would not tell your son, oh, it's money you're never going to touch, but that would be to create the right investments and make that the third priority.
Yeah, and HSA should probably be your more conservative investments, your more liquid investments, because in a year where you have a lot of bills, you want to take it from the HSA so that not only did you get a tax deduction, but you get no tax on the earnings or the money you take out.
That help?
And for 401k, talking about retirement, retirement definition, are you just talking about income, or does that not include health care also?
Well, what we're saying is we focus on retirement, and the 401k is the specific device that is designed for that.
It's just to have the separate buckets, and they're mainly psychological buckets. because people tend to, as a matter of fact, the HSA, if you max that out, and you have health expenses that come up and you spend all that down, you haven't funded the retirement plan. And that's almost like taking money out of your retirement plan to pay those health expenses, which we would be opposed to doing.
Yeah, and then your son would also have the post-tax money in a Roth, which would be helpful. So then you would have a couple of different types of buckets. But yeah, I think again, retirement first, because that's the thing that's going to be the biggest need at some point, and then the health along the way. I'm assuming your son's relatively young and probably doesn't go to the doctor every week or something to use that money today anyway. So,
yeah,
okay, sounds good. Thanks.
If it was somebody like me, I'm older.
Well, you've got
now,
the guy coming in the bridal suite later to check on you, so make sure you're okay.
He's older than me.
5.
So, who knows? 855-935-TALK. That's our phone number, 855-935-8255. We want to help. We want to help you manage money. We want to help you understand it better. We want to keep you from getting ripped off. We want to help you start a plan. And, it's not an exact science, but we're here to help. 855-935-TALK.
Talking real money.
There's a science to managing money. I call it financial physics, and you can get a free copy of my easy-to-read book, Financial Physics, at talkingrealmoney.com/free, or there's an interactive version available on Apple iBooks. It's called Financial Physics, that's spelled with an F, and you can get it free at talkingrealmoney.com/free or in the Apple bookstore.
For your real life and real future, Tom and Don are talking real money.
We're still hanging out together here on Talking Real Money.
Don has barricaded the bridal suite. I can hear the pounding out there. That's going to get ugly really fast.
Hey,
I can tell you right now.
Be patient,
Come
people.
on, man.
Be patient. I got a radio show to do.
These people are old like us. They can wait a few hours. It's okay.
Yeah, this is my brother-in-law's second. He was a widow for a while, and
good. Well, I'm glad he's found some
nice
happiness.
woman, lovely woman. She's all excited because she never had a sister, so now she's adopted. My wife.
Does she have one ever now?
Yeah.
Woo, there's a sister.
One now.
I'll tell you what. That is side. Check that box.
Debbie is giving you such a look right now.
That's a compliment.
She's right behind me.
That's a compliment. No, that was a compliment. Right. Meant to be. Meant to be.
I'm sure.
Debbie is one of those persons. When Debbie's your friend, that's a friend.
Yeah, truly. Debbie is a good friend.
She is a
Debbie
great
truly
friend.
is a good friend. Yeah.
She's not somebody
Debbie,
just once a year.
Compliments. Now.
Yeah, that was a nice. Okay, whatever. I'm not going to argue with you anymore.
What, dear?
We got to go back to the phones.
Right, he was saying nice things about you, not me. Yeah, no.
I'm going to give the number while you're still while marital bliss disappears from the bridal suite.
Yeah, from the bridal suite. 855-935-TALK. There, beat you to it. Nah.
Let's go to the phones. Dave.
Yeah.
Hi, Dave. How are you?
Good afternoon.
Hey, Dave.
I don't lose you here.
Don't lose us, Dave.
Driving out in the dingleweeds. For a retired person that is pretty sure that the currency, the American currency, the reserve currency of the world, is going to drop maybe precipitously in value as we continue with more stimulus. Now that the administration is changing now, and there likely will be more money, more printing money for various social programs. Now, what, in your opinion, is a good hedge or good hedges against that?
Dave, we got to talk.
Yeah, you want to take this, or do you want me to?
Well, I'll start.
All right.
You can finish.
You go ahead.
Okay, number one, this is something that we do every day. It has nothing to do with what's going on with the U.S. dollar. By the way, there's a lot of other governments around the world you might have noticed that have been spending a lot of money on all of this, too, that also have substantial...
You mean the Germans?
Et cetera, et cetera. But this is why, by the way, you are globally diversified, in my mind, because we don't know what this is all going to mean to the U.S. current. By the way, just when it seems like it's so obvious, it's not, because we've been talking about interest rates and all that for the last 10 years. But here's what I believe. I believe this is exactly why you're globally diversified. Your money is exposed to other currencies, to other economies, to other countries, et cetera, companies in big companies in other countries, all of those things, because we don't know who comes out of this in better shape than another. That's my take, but we don't have a strategy for hedging other than owning U.S. government debt, which doesn't sound like something you're in favor of either.
But here's the deal. It's not even, one, hedging always costs money. So it takes some dramatic movement to make hedging even worthwhile. Most of the time, hedging is insurance that you end up paying for and never using. But as Tom said, when you own a diversified portfolio, half of it in the U.S., half of it overseas, now half of your money is not dollar denominated. It's euro denominated, it's yen denominated, it's whatever those overseas currencies are in those particular countries. So you have a hedge already if you're globally diversified. The other thing is it's not about just printing money. Yes, we are taking on additional debt that someday will get repaid somehow or another.
Unhappy. Yeah, I get it.
Yeah, maybe your grandson. But the fact of the matter is the market doesn't believe what you're saying. And the market is smarter than any one of us. You
Jeffrey
might be
Gundlach?
right, but if you're right, it's probably luck. They're smarter than Jeffrey Gundlach.
No
yes.
way. Come on, man.
Yeah, sorry.
You're blowing
It's
him out
true.
of the water. Bill Gross?
So I wouldn't do anything. Wouldn't do a darn thing except
I think
globally
Dave may have-
invest.
as he said, he was headed into some other place without the phone.
Yeah, he headed into the twilight zone. 855-935-TALK is our phone number.
I wanna finish the thought around that.
855-935-8255. Finish the thought,
Well, no,
please.
here's the thing. This is exactly
you
where
to.
we started the show. Remember? Because we started the show with COVID
I know, so
raging.
long ago, I forgot.
know. COVID is raging, right?
Yeah.
The stock market is at new highs if it's the S&P 500 that you believe in. By the way, there's other parts of the market that have been way better this last 5 or 6 weeks. Interest rates are very low. There's all these things going on, and you could come up with any expert that's going to tell you that one plus the other equals something. But the problem has been they're never right. I was watching an old show the other, which I love, and presidential advisor interviewed 2 economists who said, and we asked one, well, what's the Dow Jones going to do in the next 6 months? And one said, oh, undoubtedly going up 1,000 points. And he asked, oh, Joe, what about you? The other economist. And the other one said, it has to go down 1,000 points, sir. It's down 1,000 points. And he looked at him and he said, you economists, you know what? Here's the thing. You make astrologers' track records look good. I mean, and that's a reality because economists, stock pickers, managers, they don't know. Dave, you don't know. Nobody. So that's why you just diversify. You keep your costs low. I love it.
Yeah, I love that. What was it? Harry Truman who said, "Oh, please give me a one-handed economist."
Yeah, exactly.
Yeah,
on the other hand,
a one-handed economist.
So it's
855-935-TALK is our number. Wes, you're up next. Welcome to Talking Real Money.
Good afternoon. Hey, I've with my Simple IRA, my Roth, I got those maxed out this year. I'm in the stock market. And I was looking at opening up a second mutual fund. Is that a good or a bad idea?
Well, depends on what you do with it. Where do you put it? Where are you putting it?
Well, I'm going to throw it all away and put it into Obama stickers. I don't know.
Obama what?
Obama stickers.
Obama stickers.
I don't think there's much of a market for those. I don't even know if they sell those.
Unlike other former presidents, he can't run again.
No, the thing is my mutual fund has far outperformed anything.
Well, please do tell us the secret.
Year.
We want to know which fund that is.
Which fund is that?
American funds.
Growth Fund of America?
Right up there.
It's okay. Yeah, doesn't really matter. Yeah.
Doesn't really matter. Tell me why.
Why is it outperformed? I'll tell you exactly why it's outperformed.
S&P 500.
Yeah, it's owned large technology firms that have been on a huge run. By the way, it has not outperformed the last 5 or 6 weeks, so I hope that doesn't scare you, but it hasn't. But
that doesn't matter.
That doesn't matter.
That's neither here nor there.
If you're in American funds and you're happy paying a commission on a relatively high expense ratio, then stay in American funds.
If you don't like paying a high commission or high expense ratio, go to TalkingRealMoney.com, click on the picture of the lady with the white hair, listen to the earbuds, and check out the funds, the index funds from Vanguard, Fidelity, or Schwab. Cheaper, and cheaper. Lots cheaper. And you won't ever outperform the market. Nope. You will just be the market. And that's a good thing to be when the market over the past 100 years has returned about 10% per year. I just want to be the market and be it cheap. 855-935-TALK is our number.
Tom and Don are talking real money.
If you don't have a financial plan, well, sometimes you just need a little help getting started. And we offer that free help to anybody in a meeting with one of our fiduciary advisors. To set one up, just go to vestory.com, vestory.com, or call 800-386-3004. There's no obligation, no cost, and I promise, no sales pitch.
Your guides to a really great financial future. Tom and Don are talking real money.
Nice call day today. We've gotten lots of calls today.
Yeah, I love it. So keep them coming because Don's been thrown out of the bridal suite. How many times can we say that on the show?
Don has to leave at the bottom of the hour.
He might or might not show up for work. I mean, that's just like, how's that different than any other work day, I guess, is what I'd say.
I showed up for work.
Okay.
Look at me. I'm here.
Right.
There I am. Look at
leaving
that.
early from work.
855-935-TALK is our number. Let's go to Serena. Hi, Serena. Welcome to the show.
Hi there. Thanks for taking my call.
Our pleasure.
So I went to your website and I looked at the Fidelity Index Fund that you suggest.
Yep. Mm-hmm.
And so I'm invested. I have a Roth. I've maxed out my 401k, so now I have a Roth. And I'm invested in the Fidelity Total Stock Market Index. But the International Equities and Diversified Bond Fund, I'm invested in two different funds than you suggest. And I just wanted to get your take on the funds that I have invested in.
Sure. What are they?
Them. It's FUAMX. It's the Intermediate Treasury Bond Index Fund.
Okay, that's good. Uh-huh.
And then the FSTSX, International Equity.
FST?
P is in Paul. P is in Paul.
P is in Paul. FX.
S is in Sam.
Fidelity. Wait. F. You better. That's what I got.
Let her
hey,
go
Tom,
slowly.
do you have your, phonetic alphabet?
I don't have it with me because I'm on the road today. Go ahead. Serena, give us the... Yeah, go ahead.
S as in Sam?
Fidelity.
Yep.
S is in Sam. P
Yeah.
is in Paul.
Yeah.
S is in Sam. X as in...
X-ray.
X. Yes.
Yes, the International Index Fund.
Mm-hmm.
Yeah, that's fine. That's fine.
I'm trying to see the difference between that and what we have.
I just want to see the
website.
expense ratio.
By the way, the one difference there, the one place we differ with you a little bit is the bond fund you mentioned is a treasury fund, which is going to be...
Which is fine.
It's okay.
It's fine.
Yeah, it's going to have a little less yield than being in the total bond. It's not a big deal.
Yeah, and the Fidelity International...
If I wanted to sell that fund and get into the fund that you recommend, that might even be a little better.
It would make a little...
Not
it would
much
currently
difference.
make a little bit more.
Yep.
It has a little bit more inherent risk.
Yeah.
The FSPSX, though, has a very, very, very low expense ratio. It was a great choice.
Yep.
And it has a lot of fun. It has a lot of stocks in it.
Look at that expense
I'm very
ratio.
happy.
It's ridiculously low.
Yeah. Yeah.
3 basis
three
points.
100s.
Yeah, you're doing great, Serena. I wouldn't worry about anything.
Okay. Thank you guys
You're
so
good.
much. And
You're
we
great.
appreciate what you do for us. Thank you.
That's very kind.
You're awesome. Thank you. 855-935-TALK. Keep Tom company
or not
while I'm gone.
Not because otherwise I'll just race home, see if I can get some leaves done before the rain starts to fall.
The rain's already started.
I know. I was going to make my daughter do it, but she...
Yeah,
it should be more unpleasant to me than normal if I do.
How old is she now?
She's almost 13. So
yeah, no, there's nothing.
The odds
no,
are
they
poor.
stop. Yeah, I'm telling you, chores stop between 13 and 17 for some reason. I don't
that's
know what
assuming they
happens to their
started
brains.
some other time before that. So
right, yeah, yeah. She had the good fortune of being able to work for mom and get money.
no, she has the great fortune of being basically an only child.
Well, that too.
Yeah.
But I mean, she got to work for the pizza company.
Well, that's true. She's made a couple
and
bucks.
fund her IRA.
She has a Roth. Yeah. How many people have a Roth at 11 years old? Not many.
13. Yeah, and I bet she's worth a lot now. At 13.
I haven't looked. I should look at the return on that. I bet it has been good.
I'm telling you,
well,
that
I want to
young
say
lady,
thank you to
she's
you
going to be
because
set.
how many people break up a wedding to go do a radio show? Not very many. Did
No.
they get the I-do's in before you broke off and said, I got to go live?
They
Okay.
did.
All
They
right.
did. They got it. In fact, I was in charge of the music. I was the one playing the music.
What'd you play?
It's so cool. My brother-in-law had these UE speakers, these portable battery-powered speakers.
Yeah.
And we set them out there, different, stereo, and I played all the wedding music from my iPhone through these speakers.
I know. What did you play?
Wedding-ish music.
Like, give us one example.
I don't know, like Pachelbel and, the wedding things.
Oh, okay, that kind of wedding music.
That stuff. I don't know. It was romantic-y music that was instrumental. What do I know? 855-935-TALK. Call Tom. I'm out of here.
Tom and Don are talking real money.
Before you end up buying a financial product that you'll regret later, either call us on the podcast or the show, or if you need a little more time, that's why we offer free meetings with our fiduciary advisors at Vestory with no cost, no obligation, and no high-pressure sales pitch, I promise. Just give us a call at 800-386-3004, or better yet, just set up an appointment at vestory.com, VESTORY.com.
Reality radio for a really great future. We're talking real money.
Welcome back to Talking Real Money. Hi, I'm Tom Cock. Our telephone number, 855-935-TALK, T-A-L-K. Finally got Don McDonald cleared out of the bridal suite. I'm relieved. How do you think the bride feels? But we're here to continue to take your calls about anything money related. I was looking at the variety we've had today. We had somebody asking about having 2 retirement plans, what to do with the money. Someone called and asked about having 20 years of EE bonds. Ask us about a financial advisor who turned out to be selling some pretty bad annuities, rolling you from one into another. This resulted in lawsuits. Someone asked about the law of averages. Should you expect the market to sort of perform as it has in the past into the future, which, frankly, we have no idea. But I can tell you one thing. I generally don't look to Congress for advice about money and investing. No offense if you're a member, but I'm always amazed when you look at their disclosure reports about what they own. Many of them have individual stocks. Many of them have annuity products. It's always a weird mishmash. But you may, if you pay attention to such things, be aware that there's going to be these 2 Senate runoffs in the state of Georgia, which are, it appears, going to tip the balance in the U.S. Senate to either Democratic or Republican control, which will be a big deal with the new administration, with the House of Representatives still in Democratic hands. So this is going to be a big deal. And here's the interesting part of that situation. The candidates there, all 4 of them, have now said that they will no longer own and trade individual shares of stock. I don't know if I've ever heard about 4 candidates agreeing on anything, especially something like this. One of the incumbents, Kelly Loeffler, sold all of her stock this year. Her trading in the early days became a bit of a scrutiny, the people looking into it. Another one, David Perdue, sold all of his 3 stocks, or sold, all but 3 stocks. Loeffler's challenger, the Reverend Dr. Raphael Warnock, only owns mutual funds. And he said, all members of Congress should do the same. Wait a minute. He said all members of Congress should own just mutual funds, not individual stocks. I got to be honest with you. When I look at many of your portfolios, and last week had a look at a couple of very large portfolios held at brokerage firms. Who am I talking about here? Well, in this case, one starts with Ed. There's others. And here's what I generally see in a broker's portfolio. Individual stocks, because someone there has told you it makes more sense to own Zoom than it does Boeing. A smattering of mutual funds, some actively managed high expense. We had somebody today talk about a mutual fund in their 401k that's charging them 1.5% a year, which is ridiculous. When you can go to our website and we show you how to use them free for pennies compared to that. And then I also generally see a few exchange-traded funds, et cetera. Again, some active, some passive. And my sense is the person who put that portfolio together for you is going to be able to defend one part of it, maybe not another. And so when one part goes bad, they're going to say, whoa, yeah, but look at this other. I did pick these stocks for you. In fact, we looked at a portfolio the other day that has about 300 individual stocks in it. And I'm looking at it thinking, well, I think they have mutual funds for this kind of thing. don't know why you need to own 300 individual stocks unless you were adding them over a lifetime, or if somebody just said, well, this year it's all about this type of stock. This is one place where I'm going to have to agree with a member of Congress. And by the way, this came from an article today that I think is worth reading. Any investor, Ron Lieber, writing in the New York Times, he said it's time to take a pledge: no stocks if you're a member of Congress. By the way, owning stocks as a member of Congress creates all sorts of potential conflicts of interest, because of course people in Congress are learning things that you and I don't know about every single day, right? About possible legislation, about things going on in companies, et cetera, et cetera. But beyond that, the track record of people that buy and sell individual stocks, and I know there's a lot of people lately that have been making a whole lot of money, right, at Robinhood or not, and other places where they're buying and selling securities. The long-term track record is horrible. One study they cite in this article, 6.5% points less than the overall market. Yeah, we're going to pay attention to Congress on this one. Finally, 855-935-TALK.
Tom and Don are talking real money.
There's a science to managing money. I call it financial physics, and you can get a free copy of my easy-to-read book, Financial Physics, at talkingrealmoney.com/free, or there's an interactive version available on Apple iBooks. It's called Financial Physics, that's spelled with an F, and you can get it free at talkingrealmoney.com/free or in the Apple bookstore.
For your real life and real future, Tom and Don are talking real money.
Welcome to Talking Real Money. Hi, I'm Tom Cock. A very special edition today as we talk to author, advisor, and longtime educator and friend, Paul Merriman. Paul has a brand new book coming out just in a few weeks. We're talking millions, 12 ways to supercharge your retirement. Wow, what a great and exciting title. All right. So we don't have time for all 12 of the ways. Normally, by the way, you have 100 things in a book. So I'm a little disappointed that you're running short on this one. But give us a couple of those 12 ways to supercharge your retirement, Paul.
Well, first of all, Tom, I think you need to it's important for the listeners to understand that each of these 12 ways is in and of itself a $1 million decision. Now, obviously, it's a bigger deal when you're in your 20s and your 30s rather than in your 80s, but they are really the steps you can take that will make the big difference. And I'm looking for 0.5%. If I can find a way to make an extra 0.5% on money over a lifetime, I'm talking the working lifetime and the lifetime of retirement, that should in fact equate to either $1 million more to spend or to leave. So it's not just about money in your pocket, it's about money in other people's pockets as well. So some of the things are very simple and very obvious. But one of the biggest, the thing that is going to be a life changer, and a lot of young people don't get this, is the decision to either put money into stocks or into bonds. And what do we know about stocks? Well, we know that the S&P 500 has compounded at about 10% a year over the last 90 plus years. And while bonds aren't paying very much today, they have averaged about 5% over the long term. And I suspect someday they'll be back up to that. It might be a long time, but that's the history of investing in stocks versus bonds. And the point here is that when you start putting money into a stock fund or a bond fund, you are making a decision. If you put away $5,000 a year, you're making a decision that will likely lead to about a $10 million difference. Just that one decision right there, Tom. So that's where I want to start. The biggest, the thing that's going to impact these people the very most.
Yeah, we have to encourage young people to own stocks even when it feels uncertain, and not own bonds. That's basically what you're saying for anybody that's, up to 30 years old? What age do you think people should start adding fixed income?
You know, if you look at the professionals, and I'm talking about people like the Vanguard family and Fidelity and whatnot, they're going to have you adding stocks to your portfolio in some cases in their target date funds when they're 20. Totally disagree with that. I think that's a huge mistake. And so I'm not a fan of starting it when you're 20, but it's reasonable to start adding some bonds when you're in your 40s, certainly by the time you're 50, because you need that defense. You're at the end of your working years, and now that money needs to work more safely, if you will, for the future. But no, the first 20 years should be all equities all the way. And of course, if you dollar cost average into equities, this is $1 million decision, believe it or not. Dollar cost averaging itself forces you to buy more equities when the market is down and fewer equities when the market is up. So it's another step that in essence is guaranteed in the long term to work for you. Of course, we're expecting the market to continue doing something reasonable. And again, I mentioned that 10%. That includes the Depression, and that includes the World War and all sorts of things that were setbacks for the market. But I think that holding off on putting bonds in is a really big deal. And I also think $1 million decision is that you invest in a diversified portfolio. This comes as a shock to a lot of young people, but all of the research actually shows that you are likely to make more money in the long term by having many holdings rather than having a few. And that's a big deal. You need every advantage. And if I could throw one more in that's a slam dunk.
Oh, please. Yeah.
Slam dunk would be buy a mutual fund with low expenses, because those low expenses guarantee you a better rate of return than if they had high expenses. And a lot of people, I see this all the time with young people, not only are they putting their money into bonds, but they're paying higher expenses than they should. And those expenses work against you forever. They are worse than any bear market. You know, bear markets only last for a relatively few months, but you overpay expenses and you're doing something that will lose you money for the rest of your life.
We're talking with Paul Merriman. He's a brand new book coming out here in just a few weeks. We're talking millions, 12 ways to supercharge your retirement. And, of course, you can learn more about all the fine work he does, basically all for free now at paulmerriman.com. Before we let you go from this segment, I want to make sure people are aware that the book will be sold at Amazon, but you got a special offer for people that if they just subscribe to your newsletter, they apparently get this book. They can read it right on their computer.
Yes, this is my $1,000 a month newsletter, and you will get this $10 book absolutely free. No, the newsletter is absolutely free, but here's what we're doing. Here's the deal. The offer is this. You sign up for the newsletter, you go to paulmerriman.com, and what you're going to get then is every 2 weeks you're going to be notified of the articles we've written or the podcasts that we've recorded. But when the book comes out, shortly after the book comes out to the public, all of those newsletter subscribers will be sent a link to be able to get the book absolutely free. And my dream, Tom, is that they will then forward that link to all of their friends. I don't care if we make a penny on this book. In fact, all of the sales of the book, the proceeds go to our foundation. They don't go to me. And I want that book in the hands of as many young people and teachers, by the way, as possible.
And, of course, you can always learn more by going to paulmerriman.com. That's MERRIMAN.com. He mentioned some of the other great stuff he has there. Paul has a, encyclopedic look at how investing works, how to pick mutual funds, how to retire properly. It is all online. He does it all free. You sign up for his newsletter. And as I said, I think the new book will be a fantastic one to read no matter where you are in your investing journey. We still have time to get a call or two in. 855-935-TALK. 855-935-TALK. Give me a ring. We can talk about anything money related here as we continue on Talking Real Money.
Tom and Don are talking real money.
If you don't have a financial plan, well, sometimes you just need a little help getting started. And we offer that free help to anybody in a meeting with one of our fiduciary advisors. To set one up, just go to vestory.com, vestory.com, or call 800-386-3004. There's no obligation, no cost, and I promise, no sales pitch.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-TALK. And by the way, that number works 24/7. We're live on the air Saturday afternoons at noon in Seattle, wherever you might be across the country. Adjust accordingly. But we take calls anytime. Don answers them on our podcast. We have a daily podcast that has become quite popular. He does some topics, I do some topics, but if you want our help, that's one way to get it. Now, here's another way. Somebody called me a couple weeks ago and they said, I wanted to talk to you one-on-one about something a long time ago, but I couldn't figure out how to get a hold of you. You don't make it very obvious about what you do. Yes, we are in the money management, financial planning, help for retirement field. We do this for a living, and we manage about $500 million of other people's money. I was telling my wife today that oftentimes feels like a great responsibility, and it is. And if you want our help, okay, we don't spend the entire show going through all that because we want the show to be about you, not about us. But here, if you want our help, it's pretty easy to get it. You simply go to talkingrealmoney.com, talkingrealmoney.com, and then up above here, you click on Meet, M-E-E-T, and you can schedule an appointment right there. And again, talkingrealmoney.com, schedule an appointment.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That should keep the lawyers happy.